Doing business in Africa. You can't afford to be without Africa Investor.
You're a key actor in the financial system in Africa, and on the, I would say, both as an actor but also as a thinker about how to mobilize investments and with some ideas. So when we're talking about Global Gateway capacity to mobilize large amounts of investment financings, that must resonate well in your ears, no? How do you see the role of Global Gateway compared to what you're trying to do or what you're doing in Africa?
Thank you very much. Real question. That's a real question, and I was quite moved by the Vice President's repetitions. Trillions, he said. Real trillions, in the trillions of dollars. And that pool of capital really only resides with what I have been described as the orphan in the development community. I sat on President Macron's new Global Financial Pact Summit Finance and Private Sector Task Force. And within that entire conversation, it was all development financiers opining on how to mobilize the trillions. And then, there were some quite interesting interventions which basically explained that when the MDBs were established, they were the largest pool of finance available for governments. And of course, they therefore played a leading role for governments. Fast forward to where we are today, we are a 300+ trillion pool of institutional capital relative to a multilateral development bank system pool of less than 3 trillion, but yet we are not playing the proper role, and we're being guided and mobilized in theory by the multilateral development banking system. Now, as that relates to Africa, these tend to be words, because I think we know that the mobilization ratios are just not materializing. We hear from the G20 that the private capital mobilization ratios and delivery for the development system for Africa and emerging markets and developing countries is supposed to be $10 for every $1 of development finance provided. But the reality, according to the G20 and the Capital Adequacy Framework report, is that we receive 20 to 38 cents on the dollar. And I was very enthused yesterday when I heard President Costa talk about in Europe, $1 mobilizes 15 euros, or €1 mobilizes 15 euros. So why in Africa and emerging markets and developing countries do we have to settle for 20 to 38 cents? And what damage is that really doing to development? So I think the Global Gateway has a real opportunity to change that. But I think the opportunity that it's missing, and I've been going around the conference trying to find peers. I'm not finding pension funds, I'm not finding sovereign wealth funds, I'm not finding those institutions in this room. And I really do believe in the Global Gateway. I believe in the sectors, I believe in the focus. And in fact, we have a very different view on Africa as the institutional investment community. We don't see Africa as a development case. We are long-term investors. We are elephants in some respects. We have a long-term view going forward, and we have a long-term view going backwards. And let's not forget that Africa, in past centuries, used to be 14 to 15% of global GDP. So for us as the institutional investment community, we see Africa not as a development story, but as a mean reversion, which means that we can actually reposition the continent as a globally competitive investment destination. And that's really where we see the promise and the opportunity in the Global Gateway. But I would signal one caution. And this is a message that we continue to hear, but I think it falls on deaf ears. If the European Union, the European Investment Bank, the development community are serious about unlocking the true potential of the Global Gateway and mobilizing and crowding in private institutional capital, that 300 trillion pool at scale, and creating the hospitable legal and regulatory environment that it can be deployed at speed. We must stop trying to make investment developmental, and we must make development investable. I can speak for hours, but I think that phrase is really the unlock. Let me stop there. Thank you.
Is it possible even for the local community that you're trying to work with in terms of providing energy? And is this green energy sometimes also, we've heard some elements of Europe is pushing for, with the Green Deal, forcing Africa to go green, 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 but in fact we first need to have access to energy, whatever kind of access to energy. So what would be your approach at this level?
As the investment community, we hear you. But I'm not sure that everyone in the development community cares to hear you. And I think that's the problem. When you talk about a lack of bankable projects, we are the largest institutional asset owners. Every company that's developed a green hydrogen project is in our portfolio. Every company that's developed renewable energy portfolios, projects are in our portfolio. The problem is the procurement system. We can align very specifically in Africa, which is what we're saying to a number of governments as well as the UNFCCC. Africa has $3 trillion worth of NDC potential investment needs and projects. None of those projects can be originated by the private sector. It's become a business for consultants and everyone else to write long reports and do workshops, whereas we can sit down with the government tomorrow and negotiate an institutional investor public partnership that says, which green hydrogen projects do you need? Which renewable energy projects do you need? How can we work out a better investment structure and strategy for you? And we can have the expertise that's even prepared to take the project development risk. So it's really, I think we should really focus on this point. The system is what is blocking private sector participation at scale and the mobilization of private capital. It is not that the investment community do not want to participate. And I think that's lost on too many of us when the development indicators, the investment and the financing gap keeps growing, and there's this echo chamber that says, oh, that private sector don't want to come in, we're only interested in profit, when actually our view is not only do we want to green our portfolios, but we want to green our portfolios so that they decarbonize the real economy. And when we look at just transition and adaptation and these types of things, we take a view on ESG. And we have a saying which is essentially E is the NPV of S. So you don't focus on investing in the environment while people starve and people have no livelihoods. So for us, we're very focused on climate and sustainable development has to be aligned with ambitious industrial growth. And there's a $10 trillion and growing global green industrial economy, which Africa is less than 1% of, yet we hold over 20 to 30% of all the critical minerals. We sort of see ourselves in the continent as the largest global donor because we export a lot of our value, and that is the system, and that is the reform.
But what is wrong in this? Because you mentioned the system is blocking, but what is the part of the system, if one is trying to unblock it, what is the, when you say it's blocking, what would you like as an investor?
Yes.
What would you like to see in order to invest in these local community projects for green energy? You have somebody that is looking for an investment, you're an investor. What is blocking you? And perhaps the subsidiary question is, can Europe help also in some instance to unlock this system?
I think we need to create investable asset classes and move away from the episodic project by project bureaucracy. And the Honourable Commissioner made the point. I mean, you know, when we look at climate and mobilizing private capital, you know, I'll be in Berlin in a couple of weeks at the Global Infrastructure Conference. Last year, everyone was lamenting about Fit for 55. The governments are telling us as investors and project developers, this needs to be done by 2030. And then it takes 7 years to get a wind farm permit. So that's the type of anomaly that we're dealing with here, and we need to be able to reconcile that. They say that culture eats strategy for breakfast. Well, the problem is we have a culture that wants to wait 7 years to give a permit and then on the other hand insist that you must do the project yesterday. And I think we need to be able to reconcile those things. There's a philosophical divide between the role of institutional capital in development and the reality of private capital mobilization. And until we address that, and I think the good news is the Global Gateway completely, by its selection of the industries, its geographical comprehensiveness, and its newfound or current role to become a champion in the global green industrial economy. The time is now. And I think Team Africa and Team Europe have an opportunity. But the last thing I'll say on Team Europe is that, you know, we were in Angola in November at the EU-Africa Heads of State meeting. Prior to that, we met in Addis Ababa around September for the Africa Climate Summit. We sat down in a round table with European government leaders, with African government leaders, and we said, Team Europe should not just be development finance and governments. It should be development finance institutions, European governments, and the $33 trillion representation of the European institutional investment community. And that is the difference. Otherwise, there's no math that can mobilize or crowd in that capital. And I think those are the simple realities. This is not a complicated issue.
Hubert, you wanted to jump in?
Yes, I worry that we're just overcomplicating all of this. The best architects of asset classes, it's not a development finance institution and a multilateral sort of political body. Venture capital was established by an asset owner. Infrastructure was established by Canadian pension funds. Responsible investment as a multi-trillion-dollar asset class was established by Norwegian asset owners. I think you need to see the institutional investment community as a very strong partner in being able to develop these asset classes, because I don't think that asset owners could come in and design development products. That's your expertise. And I think as we're all trying to save the planet and see nature as a globally competitive investable asset class, which is increasingly becoming because of the global ecosystem services that it generates and delivers on a widespread basis, I think the partnership with the institutional investment community, I think if you had Norges and a number of the other asset owners coming and working with the Commission, coming and working with the European Investment Bank, as opposed to the European Investment Bank trying to figure out how do we de-risk, you only get a very small part of the market. And to your point, there is a perception of risk. And I raised this question yesterday.
You mentioned that yesterday, yeah, exactly.
I raised the question yesterday. I've been raising it for 10 years, which is the European Investment Bank hosts the Global Emerging Markets Database. That database has been proven, and we've been asking for access to that data as the institutional investment community so we can properly assess the risk, so that we can potentially increase or adjust our allocations to emerging markets and developing countries. Each year, that database is not being shared. It's costing emerging market and developing country governments $15.6 billion each year on excess interest on loans. But it's not being democratized. The G20 heads of state insisted and mandated the GEMS consortium to democratize access to that data for investors, risk takers, credit rating agencies, and there's now research which basically shows that over the last 2 decades, for the global institutional portfolios, because we haven't had access to that data, we've been overpricing emerging markets risk, and we've been underallocating. That backtesting data showed that $6 trillion has been wiped off of global institutional portfolios for the lack of access to that data. Now, democratizing access to that data is a costless exercise. It costs nothing. With technology today, that could be done in 1 month, and the lawyers could very quickly figure out all of the confidentiality arrangements around that data. And, it's a costless exercise, and it's not being done. And it has priceless impact if it is, because it reduces the borrowing costs and it unlocks this private capital at scale because it addresses the perception of risk. So I think what the World Trade Organization Director General said yesterday, we need trust. And because that database is not being shared, there's a grave, growing lack of trust, which erodes the ability for governments and private sector to endear towards the global gateway, because we think if you can't do that, if you can't do something that's costless, that will help us save money, grow and develop and become more competitive, then what's the point of putting 300 billion on the table that is difficult to get access to?
And I think you got the answer yesterday that they're working on it, and I think
10
also
years.
the EIB. But I'm not trying here to defend the EIB. I'm just saying for those who were not listening to the answer yesterday that was given to you, that they are working on trying to make it more transparent.
Ignacio Corlasoli from CAF, Latin American Development Bank, Latin American Caribbean Development Bank. I want to go a question into, I think Hubert mentioned a lot. I mean, we work a lot on Global Gateway, a lot of the EIB colleagues as well, and other European IFIs. But I want to know more about instruments. That's something that hasn't been in detail maybe in this discussion. And Hubert, you mentioned it. But what kind of instrument would you see in the Global Gateway? Financial instruments, of course. And of course, I mean, I missed Latin America and the Caribbean in the conversation.
What kind of, if I understood you correctly, you're asking me what type of instruments have we seen within the
Would you
global
need to
gateway?
mobilize investment?
New financial instruments.
Yeah, well, as I mentioned, I think the first thing is to set the table and create the platform, which is essentially creating the asset class. Once you've created an asset class, you then create an industry of fund managers and all sorts of market-driven instrument origination and design. And I think that's yet to happen. I think we heard from the European insurance industry yesterday, and they described, which I don't fully disagree with, they described the global gateway as a great vision, but it actually hasn't quite boiled down itself and proven which instruments are going to be the most effective for it to accomplish its objective. I think it stays within the sort of the classical institutional allocation related, debt, equity, and all these different instruments that can fit within the profile of what we have a fiduciary mandate to be able to invest in. But I think we should have that humility where institutional investors do not pretend that we can do development finance, and perhaps development finance shouldn't pretend that it can do institutional mobilization, but yet we partner together. And I think the Global Gateway is an excellent platform. To me, Global Gateway becomes unavoidable when it partners with the European institutional investment community to do exactly what you're talking, design products, to have mobilization strategies and create the de-risking instruments and the credit enhancements that can help Europe become a global force, because the reality is Africa does not sit at the table. Europe will not sit at the table without the Global Gateway. And we need Team Africa and Team Europe to ensure that we're not on the menu. And I think that is the plea here. That's where we really need to be able to come together and co-design these instruments. Thank you.
Doing business in Africa, you can't afford to be without Africa Investor.